Well, g'day there traders, thanks for tuning into this individual share analysis update. What I'd like to do for the next 5 or 10 minutes or so is just address these top 15 shares over here on the left hand side of my screen, and we'll just speak about any compelling trade setups which are potentially setting us up to trade moving into the week beginning the 7th of April 2014. That of course is Monday's trading session. So what we've been looking at on BRK is since the breakout at 119 and the subsequent selling or exiting of our positions at about 123, we're setting up some form of a consolidation here. Whether this of course is what we call an ascending triangle. If I can just get this into perspective for you, that would be the resistance level, and let me just draw the top and the bottom. Whether we're getting into some form of an ascending triangle or just some form of a larger pennant pattern, it doesn't really matter. What you want to do is trade in the direction of the trend, and the trend at the moment is definitely bullish. We've seen lower volume since this little consolidation, which is fantastic to see. So until we break above 126.06, I'm simply sitting here very neutrally on BRK and just waiting for the right time to enter into additional call positions on the Berkshire Hathaway Class B shares. Let's talk about CHK. Now CHK is getting very close to this upper resistance level and this very important pivot point. When we get to this pivot point, we either continue above it, or as history tends to show us most recently, we actually break down and we sell back off to about $22.50 a share. So when we get up to this level, we've got a $27.58 bullish entry, but we'll also set up a bearish entry in the event that CHK rolls over and trades down to $25.60. So I'll update you on this one when we get there and when the time is right for that individual share. Here's CNX. CNX, a very neutral trade setup, $41.60, $38. We're in a very tight congested zone. We're at that upper range, at that resistance level, so it'll be interesting to see if we actually break out. Keep an eye on earnings, that is fast approaching as well. CSIQ starting to break down from what we call a bear flag. So you can see this little bullish pop on very poor volume, and you can see these two bearish candlesticks have been occurring on very good, strong bearish volume. So we have this trade set up at 29.08 down to 27.09. That should probably trigger on Monday. You'll probably have a very nice trade on CSIQ come at the end of the week. Here's DE. This has been a stellar trade. Initial breakout at 89.48, had the reset up at 92.03. Triggered on Thursday. We have a little bit of a bearish counterattack or a dark cloud cover, which is traded into Thursday's bullish candlestick. That's okay, it's just a slowdown warning. It's sort of like a bearish harami. What it means is that it respects this resistance level, but what's most likely going to happen is that we're just going to continue sideways and then get the next break higher. So be patient on DE. Most likely going to continue bullish. You can see the trade set up on FSLR had quite an interesting couple of bearish days, but what's actually happening is that we're just consolidating into the 10 and the 20 exponential moving average. Watch for this to pop. If the market decides to break out, FSLR will be a go-to share for that particular reason. Here's Garmin. Garmin has been a fantastic trade since 51.67, just continuing to move bullish. We are seeing shooting stars. We are seeing bearish engulfing candlestick patterns. So if you're in this trade, I'd bring it up most likely to about 54.94. You may get stopped out this week, but there are a lot of early reversal candlestick warnings telling us that Garmin has reached its high. Now, whether it's the high, the all-time yearly high, which is going to set up for 2014, or more just like a multi-month high, only time will tell, but there's definitely indicators and early reversal signals telling us to get out of Garmin. So that's something that you should pay attention to. LLY, again, in this tight range moving sideways, 60.54 bullish, 56.35 bearish. It doesn't matter which way it wants to move. I'm just going to jump on board when it does occur. Very similar to that of, which one was it? It was CNX, I believe. Yeah, CNX and LLY, very similar chart pattern, very similar trade setup on how to actually trade them. Now here's LinkedIn. LinkedIn was a super easy trade setup. This was from Thursday. We were triggered on Thursday at about 176.87. We're down here at 165.83. So you can see that very quick bearish sell-off on LinkedIn. We got below all of the support levels which we'd been wanting to see, and it was our next support level down here, which dates back to June 2013. So if you took this trade, congratulations. If you took a put contract on this trade, it's an exceptionally profitable trade. No trade set up, just exit your position at support and just wait for earnings to occur and then reset the trade up. Oracle, again, had a whipsaw breakout. You can see that, and now it's really starting to fail. that's quite interesting. It's either going to fail back into support, or we're simply going to retest this resistance level at about 39.70 and then get the bounce. So I'm waiting on Oracle. I'll come back on Wednesday with a better update once we get some additional price data to work with. Pepsi, again, very close to our 83.84. I do believe this is going to trigger up to $85.42. Solar City looks to be breaking down below 56.53. I mean, that's just, or 55.74. If this does occur, look for a quick move like the LinkedIn trade when you get below all of the support levels, when you got the bearish moving averages all telling you that the stock wants to move lower, trading down to our next resistance or support level at $50. That is a 10% move, a very quick and a very profitable move, which it will be. This is a losing trade at the moment. This is Sealed Air Corporation. We're down about 20 cents, which is absolutely nothing. That's okay, doesn't matter. But we are just sort of flaking out in this no man's land area. It doesn't mean that it's going to remain a losing trade. It just means that, hey, we could just flunk around here. Just hold on to it. Place your stop at about 31.50, which is going to give you about $1 of risk, which is nothing. And just potentially realize that this could be a little bit of a volatile share, much like soda as well, all right? Set your stop below this symmetrical triangle and just be patient with it. You'll probably get a bounce off the support level, and these are going to work out just as we expected. To finish with this week, we've got Target. Now Target again, 61.70, nice bearish engulfing pattern. That's fine, that's expected. We are at a resistance level. So just hold on to this, mitigate your risk, move it down to $60.40. But we will come up to this resistance target at about $63 very, very soon, especially if the markets decide to break out. So that's 15 or so individual shares that we just covered very quickly. Thank you so much for watching this. If you like the analysis, share it, comment, update, ask a question. If not, register at our website, pivotpoint-trading.com, and sign up for a free scholarship where you can learn how to do this for yourself. All the best, everyone. Have a fantastic trading week. Goodbye.